Good morning, good morning, good morning. Today we are talking about property taxes in Florida and how to read your property tax bill. Um, Pretty excited to go through these and explain. I get a lot of questions about prorations and taxes, and so just going through and talking about how to read this bill, I think will help alleviate a lot of questions. Of course, for those of you that have been on my presentations in the past, you know that I am an attorney. My name is Sam Saad. And because I'm an attorney, we start with a disclaimer that I'm giving you advice. It's good advice, but it's not legal advice. And if you have any particular questions, you need to consult with me and set up an attorney-client relationship. A little bit about me, so you know who's speaking to you today. I've been an attorney for over 20 years. I specialize in real estate law. I am the current scribe and past chair of the Naples Area Board of Realtors Legal Resources Committee that drafts the NABOR contracts. And I've just been reappointed to my second term at the Florida Realtors Florida Bar Joint Contract Drafting Committee, which drafts the FARBAR contracts. My firm is a full service real estate and business firm, including litigation and probate. And we have a title company to do all of your real estate closings. So if you have any questions about real estate transactions, you can always reach out to me anytime. My cell phone is on the screen. And I'm very excited to say that hablamos español. We speak Spanish in our office now. We have 4 Spanish speakers, and they are happy to help you. Let's dive right into our topic today. We are going to talk about tax bills and how to read them. I'm going to switch the screen so that you can see the tax bills. We're going to go through them in some detail. And I'm going to reshare my screen as soon as I figure out how to do that. Okay. Can everybody see the tax bills? I'm going to zoom in a little bit, make it easier to read. All right. So this is my tax bill in Collier County, Florida. We're going to go through the parts of it. You can see, of course, here at the top, it's Collier County. You have the payment schedule. So taxes in Florida are billed November 1st and they are due March 31st. And you get a discount up to 4% if you pay early in November, 3% if you pay early in December, 2% if you pay early in January, 1% if you pay early in February, and then you pay the full bill in March with no discount. You can see on the tax bill here, I'm highlighting, you've got the parcel identification number of that the county is attached to the property. You have a brief legal description of the property here in the middle. You can see I live in Lake Park, Block G, Lot 10. And then you've got, oops, get that off the screen, the name and address of the taxpayer. That's Sam and Amy Saad. Where to make your payments here in the middle. And then in Collier County, they arrange it, the tax bill, with the, well, I'm going to make sure I say this words clearly so you can understand the ad valorem property taxes, the total ad valorem. See here at the bottom, ad valorem is Latin. This means property taxes. And it has the total bill due here at the bottom. But you can see it breaks it out in the middle here, all this throughout the middle here,
For me,
into
my
the
coffee's
different
made.
funds that are assessed from the county and from the city. You can see I've highlighted the general fund for the city of Naples because I live in the proper city of Naples. You can see here I have a homestead exemption and my assessed value is 817, 806. So this is the ad valorem assessments. Now in Collier County, they break out the non-ad valorem districts down in this part below here, you'll see that in the city of Naples, you don't pay any non-ad valorem assessments. The principal reason is the main non-ad valorem assessment in Collier County is the garbage bill, but that is included in my city of Naples general fund, so I don't have a separate breakout. Now, when I switch over to the county bill, you'll see that it breaks out. The bottom half of the statement is a coupon that you cut out. You can see here it says detach and return with your payment. You cut this out and you make your payment based on the amount owed at the time it's paid and send that in. So this is a typical City of Naples, Collier County tax bill. We're going to switch over to another City of Naples, Collier County tax bill. This is 100 Bay Road. This is the big $295 million home that's for sale down in the city on Gordon Drive. And you can see this property is one to point out. Sometimes you don't have property tax exemptions. And then you get your exempt amount is zero here in the middle. You can see this where I'm trying to highlight it here. And you pay the full amount. Of course, these people having a giant property with an assessed value of $86 million, they pay a lot of property taxes. But I just wanted you to see what a non-homestead property tax bill looks like. Okay, this next one, this is a Collier County tax bill, not a City of Naples tax bill. This is in the Bembury district, and I wanted to point out here you have on the Collier County unincorporated Collier County tax bills, you're going to see an entry here for the unincorp gen MSTD. This is very important that you see this on your tax bill. This is the funding for the Collier County Sheriff. I'm sorry, my highlighting is not working very well. This is the funding for the Collier County Sheriff. I get a lot of questions. Let me zoom in again. Here, so you can see it better. There you go. I get a lot of questions about having to fill out the CDD MSTU a disclosure on the NABOR contract when people see this MSTD. And I want to make sure you understand that you do not need an MSTU CDD disclosure for the unincorporated general fund that funds the sheriff. It's on the tax bill. It's not a separate MSTU. However, there is an MSTU on this tax bill. It's right here. The Bembury Area Water Sewer Improvement. It does not say MSTU, but it is, in fact, a municipal services taxing unit. And it's charged by the City of Naples on unincorporated Collier County property that's next to the City of Naples for water sewer improvements in the Bembury area. This is along Goodlet Road. So you'll see here that these people owe $1,410.26 every year in a sewer assessment. That's an MSTU, like I said. This District 1 garbage, you do not need an MSTU disclosure. This is on every tax bill in unincorporated Collier County. You do not need an MSTU disclosure for that. That is not an MSTU. And it's unfortunate that Bembury doesn't say it is, but it is. And it does, and Bembury, by the way, does have a capital balance. So you'll need to call the City of Naples to get that. But again, the
Dan,
rest of the tax bill is the same in Collier County as it is in the City of Naples. You have your taxpayer. You've got where to pay the funds. Same address. Parcel ID is the same. Payment schedule is the same. Whoops. Across the top here. And again, you clip out the bottom and pay and send it in. So these are Collier County tax bills. Let's switch over and look at, if I can move this thing out of my way. There we go.
Dan,
Yes, go
good
ahead, Jen.
morning. What is MST? I see it's MSTD, but you're saying MSTU, and what does that stand for?
So MSTD is a municipal services taxing district. As I was saying, this funds the sheriff office. This is a different type of taxing entity than down here, the Bembury MSTU. So they're just different types of districts, and the NABOR contract does not require a separate MSTD disclosure. It does have a separate disclosure and checkbox in Section 7 for MSTUs and CDDs, which are community development
Yes.
districts. So that's what that is. Other questions about these? I know this gets confusing and it's a little frustrating. Okay, but Michael is asking, what number is the governor trying to get rid of? Michael, the governor is trying to get rid of property taxes. That's all these taxes. He wants to fund the government from sales tax. So it's all of these numbers up here, right here that I'm highlighting now. Underline them. MSTUs don't really go away. They MSTUs have a capital balance that's usually paid off, but then they have an ongoing operations and maintenance uh, assessment that just goes on forever. And MSTUs are for things like water, sewer. When that's paid off, it'll go away. But like beautification districts, along median improvement districts, those just stay forever because they're always replacing the plantings. They're updating the curb and the street. And then, Michael, you're asking how often does Naples reassess properties? So I'm going to take a minute and just go through the assessment process because City of Naples does not assess properties. In every county in Florida, the county appraiser assesses properties, and the county appraiser does that on January 1st of every year. So every year, the property appraiser assesses the properties of every property in the county, and that's the value that's set for taxes. Of course, it takes them several months to do all that work, get the paperwork done. In August, you should receive a trim notice, a truth in millage notice, a trim notice. That trim notice tells you what the proposed tax rates are. So all of these units down here, all of these general fund, the water management, the Big Cypress Basin, the school board, the Collier mosquito control, Greater Naples Fire, the MSTD, the water pollution control, the conservation Collier, they all have meetings. Those are all boards, from the county commission to the city of Naples to the school board to the mosquito control to the fire districts. They all have meetings. They set their millage rate. That is here. And then it's times your assessed value minus your exemptions for homestead. And you get your taxable value and the tax amount. That's all what once that trim notice is produced, you then can, that tells you what your value is for the year and what your taxes are likely going to be. When you get that trim notice, you can then fight your taxes if you want to. And then if you lose, you pay regular tax. If you win, you get a lower tax bill. And then the tax bill itself comes from the tax collector on November 1st. And that is the amount that those amounts are due up here by November 30th, by the end of December, end of January, end of February. And the sooner you pay, the less you pay. Okay, Michael is asking, so the property that's asking 295 million is assessed at 86 million. Yes, that's correct. They're asking 295 and it has assessed value of $86,786,411. And that's what the taxes are paid on. Other questions about Collier County or tax bills? I'm going to show you some Lee County ones next. So this is a Lee County tax bill set up a little differently. You can see here, zoom in so you can see how it's set up. You'll see here, you've got your different style but similar account number as your property tax identification number. You have the brief legal of the property here in the middle of the page and the site address here. Then you over here, they list your exemptions. and your values over on the right. You've got your market value, your assessed value, your taxable value, and your homestead and your additional homestead. I'm going to show you another property that there's a lot more exemptions. I'm going to show you those in a minute. You can see here who your taxpayer is. This is owned by Martin H. McGee Trust and the Allison L. McGee Trust. This is just a property that I found online. These are all public records, by the way. I'm not showing anything secret. And here you can see they break down the ad valorem section, similar to Collier County's tax bill. There are a lot more districts in Lee County. It's bigger, more populated. And then you've got your non-ad valorem assessments. And in this one, you can see it as a CDD, a Bay Creek CDD, in the amount that has to be paid, the 84608. And now this CDD requires a CDD disclosure on the NABOR contracts. FARBAR does not do a CDD disclosure. It's not required by law. It's just something that NABOR incorporates into theirs. So for those of you practicing real estate in Lee County, you will not know what a CDD disclosure looks like unless you use the NABOR forms, and you don't need to worry about it. So the CDD stands for Community Development District. Patricia, no, CDDs do not go away. They have capital accounts and operating and maintenance accounts similar to MSTUs, and the capital account can be paid down or paid off, but the operating and maintenance goes on forever. It's again similar to Collier County, but slightly set up slightly different. You get your tax notice. You clip the top here, and then you check the appropriate box for the time period when you're paying taxes, and you write the amount owed on the check. And you can see here this property is assessed at 2.9 million in Lee County. That equates this year to a $30,000 tax bill. So let's look at a tax bill in the city of Cape Coral. Again, similar. I won't go through all the top part, but you can see here the city of Cape Coral has its own millage, its own amount. They're paying $1,116.60 to the city of Cape Coral. City of Cape Coral has two special assessments for fire service, solid waste, and then they have their stormwater. So that means three special assessments. Those are all paid as non-ad valorem assessments. They are assessments, but not property taxes, which really means nothing to the taxpayer. And again, with the same, and this tax bill has got a separate page to it for how to pay all types of different things, and an explanation I think is a little better than Collier County's. So the last topic I want to address on this morning's Zoom is the exemptions. And you can see on this tax bill, zooming in so you can see it, this person, George Graven, has several senior exemptions. He has a disability exemption here. He's got a homestead exemption. He's got additional homestead exemption. And then he's got his exempt school, his senior exemptions. So this person, Mr. Graven, pays no taxes, as you can see here. So the one thing I want to address on this tax bill is, what do you do in this case when you have a contract and you have to do property tax prorations? This is where I want to talk about prorations for a second in your contract. So prorations in your contract for the ad valorem and non-ad valorem taxes are treated differently because they're taxed differently. So let me go back to a tax bill with some numbers on it so you have an example. So in this, or let me use the Naples one, totals better. So on this Bembury tax bill, there are two separate values that we worry about when we're doing a real estate transaction, that your customer needs to worry about when they're doing a real estate transaction. There's this value right here, $7,103.97. I'm going to put it in red. And then there's this value down here, $1,672.17. Also, I'm highlighting it in red. So we prorate these taxes on the settlement statement for the closing, but they are prorated differently and they're prorated differently at different times of the year. So in January through October, I should say January through October, these taxes are prorated the same, and we cut the tax bill based on the day of closing, and then we prorate the amount so that the seller gives a credit to the buyer who will pay the taxes when they're due in November. Um, and then on this part, the non-ad valorem assessments down here, the 1672, the buyer gives a credit to the seller, even though they're on the same tax bill. And why is that? Well, because these are different legal entities. All of these legal entities up here, the general fund, the water management, the Big Cypress Basin, the school board, mosquito control, fire districts, water pollution, these are all taxed in arrears. What does that mean? That means that you pay these taxes at the end of the tax year in November. They are assessed January 1, they are due in November, and you pay them at the end of the year. This is for tax year 2025. So you can see that it says at the top, and this bill came out in November of 25. And the but it has down here under the non-ad valorem, it has these assessments that are also due on the same schedule in November of 25. But they were assessed October 1st of November of 2025, and they are for the fiscal year to September 30th, 2026, and they are paid forward. So the $1,672.17 that is paid on this tax bill is paid for the entire year and is paid through September 30th of 26. So some of this money is paid in arrears up here on the 7,100, and the 1,600 is paid forward. So when you see on your settlement statements, which don't have an example ready, but you can look at any settlement statement you've gotten from a closing, you'll see the taxes are not all in a line. Some are credits, some are debits, depending on the time of year. Now I say the time of year because November and December, when we know the taxes for the year, because remember, the tax bill comes out November 1st. So if you have a closing November 30th, we're going to have to pay the December amount, the $8,512.86 for that November 30th closing the taxes are going to be received by the tax collector the next day. And then the seller will have paid all of the taxes for 2025, but the buyer will own the property for 2 months of the year. So then the buyer gives a credit to the seller instead of the seller giving a credit to the buyer. So, and this is mostly what I have to worry about. So I'll answer all of your questions on it, but I'm not going to dwell on it too much. Just understand that when you're looking at the settlement statements, we pull these numbers off the tax bill and then arrange them on the settlement statement based on a daily proration. So now I can see your faces and you're all confused. What questions do you have about prorations? Any questions about prorations? You can unmute yourself or put it in the chat. So everybody understands what I'm saying. Property taxes, ad valorem, paid in arrears at the end of the year. Non-ad valorem taxes, paid forward from October 1st to September 30th, and it all goes on the same bill, and it all gets prorated differently on the settlement statements. And then I talked about exemptions already. If you have no exemptions, then the buyer gets the seller's exemptions for the year. And when your buyer buys this property that's on your screen now for Mr. Graven here, if you buy this property, you will have no prorations for taxes on the for property taxes, ad valorem taxes on the settlement statement. You will have assessments, non-ad valorem assessments that are going to be on the tax bill or on the settlement statement. But next year in 2026, when Mr. Buyer has bought this property from Mr. Graven, Mr. Buyer is going to have a huge tax increase because he is going to get all of these taxes that were not paid by Mr. Craven from the previous year are going to be assessed in the current year at the current millage for the new buyer who may not have all of these senior and disability exemptions. So you have to warn your buyer, hey, listen, you're not paying taxes in 2025, but you will in 2026. Mike, you're asking, what is the rationale for the CDD disclosure NABOR but not FARBAR? That's a good question. I don't know. I wish we could take it out. It's not really relevant in any transaction. It's on the tax bill. It's a public record. It's easily understood and figured out by anybody who sees a tax bill. I don't know why we do that separately in NABOR. Are there any other questions on taxes, property taxes, real estate contract questions you might have?
Good morning, Sam. I do, if I might ask you a question.
Please, Deb.
Thank you. I have a young couple on a listing presentation, and they have not filed for their homestead, and they purchased this year. They must be transferred through DHS probably early next year. Would the advice I give them be correct, and that they should file for their homestead now so that they can port it over early next year when they purchase their second home and sell this first home?
So what year do they purchase the current home in?
They purchased it this summer.
They will not be eligible for homestead this year, but they can apply for homestead for next year anytime until March 30th of 2026.
Okay.
So they can
Thank you.
apply for homestead now. It's probably a good idea. And then they could port, that's right, they could use portability and they could port their homes, their value to their new homestead. But I'll tell you, there's not a lot of advantage to doing that because they won't get homestead until next year. And then then they will move in the next year. And if you said they're buying again in 26.
Yes, they're probably will just go and buy now. So it was my concern about them filing the application now this week, so that when they're ready to purchase, which will be January, late January, they can port over. I understand.
Well, they
porting
can't
over
get the
value.
2025 homestead because they didn't own it January 1. January 1
Yes.
is the drop dead date for everything homestead. You can't
Gotcha.
rent your property on January 1st if you want homestead. You have to be in it, living there, and own it January 1. So if they didn't own on January 1, there would be no benefit for them to file for 2025, starting in 2026, if they're just going to move in 26, because they can
Yes,
file for their new property in 26. They won't get portability.
of course. Thank you very much.
Yep. All right, Lori says, what is the senior exemption? Lori, I readily admit that I do not know all of the exemptions, but if you're over 65 and you make a small enough income, you get a graduated exemption down to zero for small if you have lower incomes, you can afford to stay in your home. Other questions about property taxes or homestead or portability?
I have a question.
Yes, Margie.
Is it, if you maybe you already covered this, for the example of the gentleman that had paid zero taxes,
Mm-hmm.
going forward, if you have a buyer buying that home, is there a multiplier that's good to kind of estimate what taxes might
Yes,
be?
there are property tax calculators on the property appraiser's websites. You can enter the sale price and it will spit out your new tax bill. Yes, there are.
And you find those to be fairly accurate
I
for the
have
most?
not gone back and compared them to previous. When I've searched, I assume the property appraiser knows what they're doing. That might be a big assumption given that it's government, but they're pretty close. Mine was pretty close. I checked my personal home, and it was pretty close. Holly, you're asking what's the wholly exempt school and wholly exempt exemption? Those are I believe those are for elderly and poverty. I'm not sure how they do it. And then Lori, you're asking about portability. So portability, when you buy a home, you get a value of your home. They assess your home on January 1. That's your home value for the year. If you say 5 years later, you buy a new home, if you have had homestead for 5 years, your property taxes have only gone up as much as 3% a year. But your home value, at least in Collier County, is probably appreciating at 8 to 10% a year. And tax rates may have risen. But the Constitution protects homestead. Your taxes cannot go up more than 3% a year. So if you go to buy a new home, instead of resetting your tax bill so that it goes up significantly when you move into a bigger, better home, you port your homestead, and there's a formula up to $500,000 of value is subtracted from your new home value to bring down your property taxes on your new home. That's why you could have two homes exactly the same with the same purchase price and vastly different property tax values or property tax assessments, depending on the status of the owner, whether they had portability or not, and the time they bought it. That's kind of how portability works. And the property appraisers' websites usually have a portability calculator on them. I believe Collier does. I'm not sure if Lee does. Therese, you have a question? No. Okay. Other questions about portability, property taxes, homestead? Therese?
Yes. Can you hear me?
Yep.
So if you buy a property and they're paying zero taxes from all their deductions or whatever, is there a way that the new buyer can partially pay some taxes so they're not hit with such a huge tax bill?
No, you can't. You can't pay taxes forward or backwards. You have to pay them on time when they're due based on the amount. So your buyer needs to be prepared for, and if they're getting a mortgage, it's covered by the mortgage anyways, because the mortgage will collect the estimated taxes. But if you have a cash buyer, then when they get their tax bill in November of 26, it's going to be significantly higher, but they have 11 months to plan for that. Other questions? Anybody? Lori, you're asking portability. Is there a time limit when you buy? No, there's no time limit. You move in, you gain homestead, you file for homestead for taxes, and then the next year you can go. You can move and you'll get your portability. All right. Any other questions?
Sam, I had a question. It's
Oh, I
Valerie.
see. Yeah, Val. Yep, I see your questions. What is the definition of ad valorem? Ad valorem versus non-ad valorem. Ad valorem just means property, and the assessed value, the taxable value, is minus the homestead.
Okay,
Yep,
thank you.
you got it. Lori, you said you have to purchase within 2 years to maintain. Oh, I see. Yes, you have to purchase. I thought it was 1 year actually, Lori, to purchase. You have a year to purchase when you move. Maybe it is two. I would have to check with the property appraiser on when you have to buy to maintain your portability. That's a good question. I'll look at that. I'll email everybody. All right, it's 8:34. We're 4 minutes past time. Thank you, everyone, for your time today. I really appreciate your time. If you have any questions, please email or call me. I'll talk to you all soon.
Thank you.
Thank you,
Sam.
Sam.
Bye-bye.